Hey, it's Ken again. So what we're going to talk about now are some of the things that I look for inside of a market to determine for me whether it's good or bad. And this, I think, everybody needs to take a look at before they actually even enter into a market. So there's really two things. The first thing is what I call net migration. And the second thing is annual GDP, or gross domestic product. And so let's first talk about net migration. And so when I'm taking a look at a state, for example, let's say the state of Idaho, what I want to see is whether or not the state of Idaho is growing or shrinking. And net migration is the difference of people coming in versus people going out. And so this is monitored. All you got to do is go on YouTube or the internet or anywhere and just type this in and say, what's net migration? And it'll tell you it's the difference of people moving in and moving out. That's all it is. Every single state is monitored every single year. Now, that doesn't specifically help you completely on where it is that you want to invest. Because, for example, all that growth in the state of Washington might be going into Seattle, and that's it. And so you do have to drill down into the smaller cities and even there into the submarkets. And as I said, I talk a lot about this in my book, The ABCs of Real Estate Investing. The other piece that you really need to be paying attention to is the annual GDP, or the annual gross domestic product. So all this is it's a financial statement for the state. That's all. And so a city has one, a state has one, and the country has one. So it's like the U.S. leads the world in GDP growth, gross domestic product growth. And it's all it is the goods and services and trades for that particular entity. So in this particular case, you're looking at the state. Now, that's a very different set of states. That's Nevada, that's Utah, and it's also Washington. So Washington, for example, is leading in net migration, and it's also leading in gross GDP. So Washington grew by almost 4% last year in 2017, and now this year it's looking to grow again in 2018. And there's a reason for that, and it's very complex as to why, but it has to do with pro-government and businesses. And so if businesses are doing well, then that means the GDP is higher. And so typically in those kinds of environments, jobs are harder to find, wages are higher, occupancies are a lot higher, and vacancies are low, and there's rent growth, and all those things around the GDP. So GDP is a very, very important piece of when you're taking a look at for when you want to invest. Because what you want is you want a very progressive state. Now, with that being said, at the same time all those two things are going on, Texas is actually leading the country in job growth. So that's another thing you got to look at, and you got to look at where in Texas. So as you're starting to dice into what markets are best, if you think about it in its purest form, population growth creates demand, period. Okay? This is very, very simple. So if there are people moving somewhere, it's putting stress on an economy, good stress. It's putting stress on the restaurants. It's putting stress on the occupancy for apartments. It's putting stress on the occupancy for office space. And so as you start to look at the stress levels as it starts to hit the supply, the prices go up or down based on that. So during the last recession, when we saw all these houses kind of hit the market that people lost, there was a lot of excess inventory. And that's what happened, was all that had to be absorbed. And so we talk a little bit about absorption. So when you look at supply and population growth as it creates a demand, it's going to determine whether a market's going to go up, stay flat, or potentially be soft for a long, long time. So a great example of that right now is Las Vegas. Las Vegas got annihilated 10 years ago during the housing boom. And it still hasn't recovered. There's still not enough people moving there to create, to take care of all that excess inventory from 10 years ago. Now, prices have gone up. All that stuff's been true. But there's still a lot of excess inventory. Now let's go to Phoenix, where all that inventory is gone. because Phoenix has grown very well over the last 10 years. And so now we're starting to see new construction and things like that. And so these are all the little things that you need to determine and look at before you enter into a market. But start with net migration and then start with GDP, because those are two very good things to kind of see the health of a state and where it's heading. And that's how you want to invest. You want to start there and then start to drill down into the individual cities and then into the individual neighborhoods.